Hey everyone, this is the topic I am super excited about. It's RV tax planning and strategies. This is something that my husband and I are dreaming about the day that we can retire and we want to buy one of those Sprinter vans and just be able to go tour the country and be gone for months and months at a time and not have any responsibilities back home. So that's what I'm going to be talking about today. I'm going to be talking about sticks and bricks versus full-time RVing and the pros and cons of each. And I'm going to be talking about how to have the best of both worlds. I'm going to be talking about how to get tax write-offs, where to establish your domicile. Say you're a full-time RVer and you sell your home. Well, a lot of people want to do that because they want to get out of their expensive state that they live in and go to maybe one of the 9 tax-free states. So a little bit on how to do that. I'm also going to talk about if you have a business. A lot of RVers have full-time businesses where they're working on the road. So where do you set up your LLC? And then also where do you pay your state taxes? So that's everything I'm going to be covering today. So the first question you got to ask yourself is, do you have a business purpose for your RV? If you do not, and you do not want to have a business purpose for your RV, then there's probably not much like that we need to talk about, like that's it. But if you have a business purpose for your RV or you want to, this would be a really good video for you to watch. Okay, so there's the full-time RVer versus the sticks and bricks. A full-time RVer is someone who has sold their home, they've sold it, and they bought an RV and they are living in their RV, traveling the country, and they're happy as can be. A sticks and bricks is someone who still has their full-time home and they have an RV. So either they spend some of the time out RVing, but they still have their home that they have to take care of, or when they're at home, their RV just sits there. So those are the two situations that we have. So let's talk about a full-time RVer and what are the pros and cons. The first pro is you have no cost to maintain a home anymore. Like all that maintenance and property taxes, like it's out the door. Like you do not have to pay that anymore. You also went ahead and harvested all of the equity that you have in your home. Say you bought it a long, long time ago and you have all this equity in your home. You went ahead and harvested that, you sold it, and now you bought an RV. Like now you have money. Because a lot of time people, they're house rich, but they're cash poor. Well, this is where they've taken all the money out of their home. They bought an RV and now they have money to live off of. Say if they never put money away into an IRA or a 401k, or they don't have a pension, which is really rare anyways. And now they have that money to go ahead and live off of and to tour the country. Another thing, another pro is that you could possibly change your state domicile for tax purposes. So if you're not living, say you're in California, which is one of the highest state taxes in the country, and you don't want to live there anymore, you don't want to pay the state taxes, there's 9 other tax-free states that you could move to and not have to pay state sales, or not sales tax, state taxes anymore. You also get to save on money and you get to travel the country. You're free. You're finally free going out doing exactly what you want to do. So what are the cons? Like the cons of a full-time RVer is if it's your full-time residence, you can't write off your RV. So you can't write off your RV. There is one exception to this, and that's if you have a business that you're running. So we can take a home office, but you also have to have one of those toy hauler RVs where literally there's a section broken off because RVs are really small anyways. So you would have to set up your home office in the toy hauler part of the RV. That's like the only exception to being able to write off your RV. Another con is that the only mileage that you can write off with your RV is if you're moving one business, and you have to have a business with it, right? You have to be working out of your RV, is if you're moving, say, from one business location to another business location, that's when we can go ahead and write off miles. So say you're staying at an RV park in Florida and you want to move, and it's getting hot in the summer and you want to move up to, say, Wyoming. Like, we would be able to write off the mileage from your the Florida campground to the Wyoming campground. And that's the mileage that we would be able to write off. And then say when it's starting to get a little bit cooler for you and you want to come down to Texas, we'd be able to write off the Wyoming mileage down to Texas. That's the only mileage that we can write off if you're a full-time RVer. Another con is you're living entirely in a tight space. So I know the small homes, those tiny homes are a big thing right now. Some people like it, some people don't, but that is a con. Like, you are going to be living in a tiny home situation. Another con is that your RV will depreciate while your primary residence will typically appreciate. So the RV is losing value as you're living in it and driving around the country. And then another bad thing, another con, is that you're most likely going to have to rent a storage unit, typically one that's probably air conditioned or climate controlled. So you'll need to rent a storage unit in order to keep all your stuff, unless you just completely sell everything. But there's some stuff that you probably just want to have in a storage unit. So we talked about the pros and cons for full-time RVing. So let's talk about the pros and cons for sticks and bricks. All right, a pro is if your RV is used for business, the owner can depreciate the RV if you have more than a 50% business usage. So we can depreciate that if it's more than 50% business purpose. So what that means is you have your primary residence, but you say don't like to fly, but you have a business where you need to go to conferences. So you're taking the RV to conferences. Well, if the only time that you're using that RV is to go to conferences, then that's like 100%. Or say if you're using it, you have a conference, you live in Texas, have a conference in California, you're driving there, but you take, like, out of I don't know, a 5-day trip there, you take like 2 days and, I don't know, go see the Grand Canyon or something, like off the beaten path. Like, this is truly pleasure and not just driving to the conference, which would normally be like, say, a 3-day drive. Um, that's still more than 50%, right? So as long as it's more than 50%, then we can also depreciate the RV. We also have the ability to write off actual expenses on the RVs. The RVs are not maintenance free. Like, there are lots of repairs and maintenance that could possibly go into repairing your RV. And then you do not need to have a storage unit for all of your stuff, or you don't have to move or sell. So that is another pro. Like, you can keep everything in your home and then just up and move. All right. So what are the cons of having a home but having an RV? So you still have the cost to maintain a home. So if your home isn't paid off, I mean, you're still paying your mortgage, there's property taxes, and then, roofs, ACs, all the normal wear and tear on your home. Like, you will still have that cost to maintain your home. Another thing is you can't change the state domicile. Like, this is a huge one. So say you're living in California, again, high state taxes over there, and you don't want to sell your home, but you're like RVing, say, 50% of the time. Like, you still have to file that California state tax return and pay your California state taxes. So that's a big one. Like, for people who are wanting to get out of those high state tax situations, like, this is a con. Like, if you don't want to sell your house, you will still have to pay taxes to that state. Another con is they don't like seeing someone else use their RV. So this is another rental idea that you could have. If your home is sitting there, you could rent out your RV when you're not using it. If we can get over the fact of someone else is using it, like, this is a huge opportunity, big cash flows for you, renting out those RVs. Outdoorsy.com is a big one. And I mean, just get someone to clean and sanitize it in between uses. And if you have it listed 100% of the time, like we could write that off like 100% of the time. So that's another strategy you could use. Also, if you're out RVing, we could rent out your home while you're not using it as a short-term rental loophole. Like, so that's another idea if you have the sticks and bricks. All right, so they hate seeing the RV just sitting there. Another con is you feel trapped inside a residence. You're not out cruising the roads, and your equity is trapped in your home. All right. So how do you get the best of both worlds? If you have a sticks and bricks, you can rent the RV when you aren't using it. I just talked about that. If it's available for rent and it's business use, you can get 100% business use. So another thing is if you have your RV and you use it 100% for business, but then say you want to use it for personal use and the personal use is 14 days or less, then we get to use the Augusta rule. So that's another tax strategy. So we can create cash flow by renting the RV. We can own, like, another idea is only use the RV for business trips. Like, if you're only using it for business trips, then it's 100% write-offable. And then now the RV is going to pay for itself. Like, if we can rent it out while you're not using it, like, that's ideal. There's a really big market for that. For people who don't want to buy an RV yet or can't afford to buy an RV yet, but they need an RV for like a week out of the year. Like that's huge. Like my husband literally does that every year for the deer hunting lease. They don't want to be intense anymore, and they rent one for an entire week. So how to have the best of both worlds? If you're a full-time RVer, we can rent out your home while you're gone. We can, like, if you need to, we could refi the home equity to buy the RV. Like, don't sell your home, just refinance your home to be able to buy that RV that you want to. We could rent the home with a short-term rental strategy. It's already furnished and saves on you having to buy like a larger storage unit to go ahead and store all your stuff. And what you can do is one of the rooms or maybe a garage or something is you can have a lock off part in your home for that, all the stuff that you don't want people to see, like maybe your pictures and photo albums and all the stuff that you wouldn't want out people to wreck or look through. That's where you go ahead and put in the lock off, your clothes, obviously. And then when you do come home, you can go ahead and take it out of the locked off part of your home and go ahead and use it like normal. And again, this will create cash flow and continue to build equity in your home. So it's a really great strategy if you're open to that. A question that we get is for people who have a business or they want to start a business, where do I set up my LLC? So if you still have like a W-2 job but you're dreaming like us, like me and my husband, we're dreaming of doing this in say the next 8 years, is if you have a W-2 job, what is something that you could do to create a side gig right now for that when you do go to full-time RVing or being a sticks and bricks, that you can have a business purpose for that RV. So think about that, because if you could have a business while you're doing the RVing, there's a lot more write-offs. And plus, like, it might be cool for the first few weeks, like riding around doing nothing, but you might get a little bit bored if you don't have stuff to do. Like having a part-time business on the road, like, might be ideal. So where do I set up my LLC? So if you still are going to have your sticks and bricks, still going to have your home, you will set up the LLC in the state where you live, okay? If you want to turn into a full-time RVer, the next question to ask is, are you going to spend the majority of your time in one of the 9 states that are tax-free? There's 9 of them. Florida, Texas, Tennessee, I think Wyoming. Those are 4 off the top of my head, but there's 5 more, and I can easily tell you who they are because I have them in my cheat sheet book. But would you like to spend the majority of your time there? If the answer is yes, choose which state you want to spend the majority of your time, and then that's where we're going to set up the LLC for you. If no, like if you want to stay in California, maybe like Louisiana or somewhere where there's state income taxes, that's fine, but we're going to set up in the state where you want to spend the majority of your time. And if it's not more than 50%, like say you know that you're going to spend 4 months in Louisiana, maybe 3 months in Florida, 3 months in Tennessee, and 3 months someplace else or whatever. Maybe it's 2 months. We're going to set it up where you're going to be the majority of the time. So if you're not someplace like 50%, like wherever you plan on spending the majority of your time in that state, that's where we're going to set up your LLC so that you can do business um, while you're RVing. Okay, so if you wanted to go ahead and change your domicile, say you want to get out of like California, I think Washington is another big state. Um, Maybe it's Oregon, where the state taxes are really high. You want to set up, you want to establish domicile in the new state. So these are some things, you don't have to do all of them, but these are a list of things that you really should do in order to establish a domicile in one of those tax-free states or a state that has lower income taxes, right? So the first thing is you want to rent an apartment, purchase a home in that new state. If you want to become a full-time RVer and those aren't an option for you, you don't want to do them, then at least get a storage unit in that new state and pick a date, pack up the U-Haul, have the U-Haul and then have the RV and go unload it in that state. Next thing I want you to do, and like do this on a weekend. Say you want to do this June 1st, like, you know what, I'm going to do this June 1st, whatever that first weekend is, go ahead and get that storage unit. Obtain a new driver's license in that state. Register to vote in that state. Go ahead and start attending church in that state and move your membership. Register your vehicles in that state. And then once you have done all that, you can also set up a gym membership. Like if you're going to be there a while, go ahead and set up a gym membership for that new location that you're at. Then sell your property in the old state and convert. Or the other thing you could do is, if you're not going to sell it, like you want to keep it, the other thing to do is convert it to a bona fide rental. That way it's now a rental property and you're good to go. But the most important thing to do is you have to actually move to the new state, and you want to be there for at least 6 months. Like be there for more than half of the time of the year. Do not even go back and visit that old state. Like be in that new location for a while, because those states, they need your tax dollars. So guess what? They're going to go and audit you. Like they literally are doing this. They are auditing people. And if you're going back home visiting all the time, like say you move like June 15th or June, that first weekend of June, but then you go back home for July 4th to visit family, they're going to be like, you didn't move. Like your cell phone is pinging off of California all over the place. Like, so like you really want to make sure that you do not even go back and visit for a long time, like at least like 6 months to a year. If you get audited by the state, that's one of the things that they're going to do, is they're going to see where where your cell phone is pinging off of, to see where you're at, because they want your tax dollars because they need it. All right, so then another question I get is, where do I pay state taxes? So there's a term called nexus. So it's wherever you have nexus. And the technical term for nexuses refers to a connection, a relationship, or a link between two or more factors or elements. It's often used to establish a casual or a substantial relationship between different conditions or criteria, especially in matters of taxation, jurisdiction, and regulatory compliance. So think of it this way. If you are touching a state and you're making substantial money there and you're there for a substantial amount of time, that would be nexus, and that's where you're going to have to pay taxes. If you're making a lot of money there, then we'll want to file a state tax return. So think of it this way. So if you're going around in your RV, your full-time RVing, and you stay like 3 months in Alabama, but Alabama, like we pretty much sold nothing. We weren't there long. We didn't sell it very much. But then we spent, say, the other 9 months in, say, Oklahoma. I think Oklahoma has state taxes there. And we sold a lot of money. Like that, we were at a park and we just made a lot of money. We were out advertising that we were doing this, and we made the majority of our money. So if we made a significant amount of money, like revenue, and we're there a significant amount of time in that state, then yes, we'll probably want to do a state tax return for that. But like, say going back to Alabama, like we weren't there like that long and we really didn't make a lot of money, like percentage wise. And it's a case by case basis. Like we probably will not do a state tax return for that state. And then wherever our houses, wherever our sticks and bricks is, like say we're Texas residents, that's where our house is. We would want to do one there also. However, Texas doesn't have, it's one of the 9 tax-free states, so we wouldn't need to do one there. But so that's just things that you need to think about. If you have a business and you're selling items, we'll want to keep track of how much money you're making in that state. And it's a case by case basis. It's something that we'll need to talk about if we're going to file a state tax return there or not. All right. I hope this was helpful to you. I love learning about this. I love teaching this because ultimately, I know for me and my husband, this is something that we're going to want to do. So, in the near future when we retire. So, if this was helpful to you, go ahead and subscribe to our channel. Every week I come and I do a tax training, tax strategies on a different topic. Next week's topic, I've been thinking about this one for a while. I'm going to do it on buying, selling businesses. So if that interests you, make sure that you subscribe to this and you'll get notified when it comes out. And also go ahead and share this out, comment on it. And ultimately, if you need any help, like you're like, yes, like I am an RV or I have an RV, like maybe I haven't done anything with it, but I want to now, go ahead and book a discovery call. Liz will talk with you and get all your questions answered. And if it's something we want to move forward with, then I can have a comprehensive consultation with you and help you strategize for the year. Thank you.